right, here we go. What's up, guys? Welcome to the 5ers live trading room. It's Monday. How's it going, everyone? Welcome, Victor. How are you?
Hel- I'm doing fine. How are you doing today, Jonathan? It's the 16th of December. We're nearing the end
Yes.
of the year. I hope everyone watching us is had a great year and all those promises. I mean, from uh, the input you have in the growth, I should say, you have in your trading journey, all the promises that creates for next year. Imagine what we have been able to achieve this year, and imagine what would that mean for the coming year. That gets me very excited.
Yes, absolutely. And the thing, what I love about coming up to the end of the year like this, we can really do deep dive into the journal. And now's the perfect time to do that. If you're taking, if you're celebrating if you celebrate Christmas or whatever holiday you're celebrating, or if you're just taking a time off at the end of the year, is the perfect opportunity to really go through your journal and do a yearly review and really dive deep into your trades, your statistics, and hopefully you have journaled. And when I say journaled, you don't really have to do it super detailed to get statistics. If you connect it to, I know Victor is using my FX books and things like that. I'm using Edgewonk, but the most important part of my journaling comes from this book right here. So I got one of these book every year. I get a new book, and so that's the 2024 book. And here I have a new one for 2025, and it's just it's an empty book, right? And every day I write in it. I write my based on my trading and my personal life, and that is really where I find most of my personal development as a trader. It's really in the stuff that doesn't really have to do with the statistics of my trading, but actually the life around my trading and the emotional life and the emotional triggers that gets me into the trade and things like why am I exiting trades early and why am I entering them early and things like that. That really helps a lot because I believe that from my point of view as a discretionary trader or systematic trader, I know that my edge lies in knowing when I'm supposed to be trading or not, which is, for me, that is what I'm supposed to be trading when I'm in the flow, when I'm in that zone. That's when I'm supposed to be trading. And this book helps me figure out when I'm in that flow. And today, for example, I feel like I don't feel that I don't feel a strong motivation to trade today. I feel like today I'm better off observing the market, listening to the market and not really, I don't really feel that rush to be trading. And actually, that's the type of mindset I'm in when I take the best trades. So is to have a completely relaxed and balanced state of mind is what works really well for me. And that's the things that I've figured out through journaling and also doing the yearly journal review. Very important. Victor, are you how do you deal with that? Are you looking at any looking back over your years? Are you doing any improvements or any adjustments?
Well, yes, I think as you said, the growth as a trader comes from us reflecting on how we manage the situation, why did we do the things we did, right? And either it be good or bad, that's where we can learn from our mistakes, actually more than our victories. But what I do, I review annually at the end, of course, of my at the end, not necessarily at the end, but perhaps at the end of the beginning of next year. I do the review of the whole year and see where did I put my focus on, and how well did I follow my plan. And I do that with the statistics, but as well as looking over my journal being the same as you, as the mental process behind executing my trade plan. How am I going with that? How am I respecting and growing? The gap between how big is the gap become, or how has it changed the gap? I mean, the gap between the perfect execution of my trade plan and the actual execution I got, and try to identify, am I getting better? Not. That's where the growth is. I think that's the value, by reviewing, reflecting, and being honest with yourself. What can I do better? Uh, that's it. That's what I do.
Yeah.
I do this every month, actually, for the monthly period. At the end of the week, I do that as well, reviewing the whole week. And at the end of the year, I do the same for the whole year.
Yeah, same here. I try to do it on a weekly basis, monthly basis, and then yearly basis. And the way that I have set it up in when it comes to my personal journal, where I also make notes on my trading results. So what I do is I have obviously I write in my journal. I try to write it in every day. Obviously, I'm not going to do that every day, but sometimes you miss it. But I try to write every day, and then on the weekend I go through the notes that I did throughout all the days, and then write a summary of the week, and then at the end of the month I write a summary of the month. And doing it that way, it's actually really easy to do a yearly review, because you're only going to be looking at 12 different pages, right? So you look at 12 different pages, that's your each month, and then you do a yearly review of your month. And it's such a powerful thing. If I go back in my journal and I look at the things that I wrote about in January, and anyone to compare that, is the things that I wrote about in January, is that still a problem? And sometimes I go back and I look at January and I'm like, these things right here that today isn't a problem at all in my trading was actually the main problem back then, a huge problem back then, and now it's not even a tiny issue. So doing that type of like small improvements every day really adds up at the end of the year, and I think that is super important. And you want to look at your when you look at your equity curve, you want to look at your statistics, see, are you improving or not? And you don't have to improve a lot, but if you're just improving small tiny amounts every day or every month, then that stacks up. In a couple of years you're going to have some huge improvements for sure. So for those listening now, if if you want to have like a New Year's resolution, or you want to promise yourself something that you want to get better at next year, and you're not journaling today, think about that. Because if it's one thing that's really going to help you on a personal level, on a trading level, it's some sort of journal. And you don't have to make it super advanced or super complicated. Just having some type of journal will definitely help you going into next year. Okay, Victor. So I'm thinking, looking at the markets here. I want to start. We got Monday. We're going to be starting with a fresh week here. I want to be looking at see if we have any news this week. So I'm going to be pulling up the. Where do we have the economic news calendar? I got it right here.
We do have quite a number of news event coming up.
We do.
Yes, we do. Actually, we have the FOMC statement on Wednesday, and on Thursday we have BOJ also coming out with their policy rate, or their monetary decision rate, interest rate, that is. So those two are major. Actually, pound as well on Thursday. So not only the yen, but also the pound. So you got three currencies having the interest rate stated or decided, published this week. That's huge for each one of those currencies.
Yeah, and we have unemployment rate on Tuesday for the pound as well. We have retail sales on Tuesday for the US, and of course, then as you said, on Wednesday, interest rate decision. We get FOMC interest rate decision for the US, and of course, as you said, also inflation rate. So yeah, we got a lot going on. I guess today is the only day when we don't really have anything major going on this week. So I'm expecting, the market is definitely, probably in a scenario like this, you have the market going quite. It's going to be lower volume, because people are obviously, the bigger players are waiting to position themselves based on FOMC. Okay, so you have the FOMC coming up, and a lot of people are waiting for the FOMC. They're waiting for information from the Fed because they have a scenario in mind, and they're thinking like, so me, for example, I'm a price action trader, but I am fascinated by the fundamentals, like the fundamentals of the economy, the fundamentals of the Forex market. I'm fascinated by that, but I also know that as a price action trader, as a technical analyst, I know that price action in 99% of the time reflects all known information for the market. So when the new information comes out, price action will change and it will be visible in price action. So price will confirm the fundamentals, right? Or the other way around, but the price will move with the fundamentals. So if the sentiment for Euro USD, for example, is switching, it's not going to switch without price showing that switch. So for example, we're now in what I believe to be a possible accumulation range right here. This could be, you know, just a pause before we go down. But I view this as an accumulation range at the very lows of this range right here. And I do suspect that the sentiment that is insanely bearish on EU will slowly but surely switch over the next week or months. And I hope that we stay within this range while that is happening, because I'm building a position here on EU. The way I'm looking at this is everyone's bearish on EU. What happens when everyone's bearish on something? Well, if there's a switch in the fundamentals, that switch can happen quite quickly because a lot of people will be caught on the wrong side of that trade. You might have a scenario where you have liquidating, like look at liquidation cascades like this one right here. That was like a very obvious capitulation move on EU, and you might have the same thing to the upside, almost like a short squeeze, you know. Might happen when you have a lot of people caught on the wrong side of, and I'm thinking also Europe is not. I mean, sure, the European economy is not looking good, and you know, from a political point of view, very unstable economy, not looking very good. But it has to switch at some point. It has to be finding a balance, finding a base somewhere, and I think we're getting close to that area. Now, we do have 2 points of interest. We have this general area that we're trading around right now, which is 1.05. And then, of course, we have the parity line, the one right here, which is obviously going to be quite important. So if we drop from this range, then, of course, we have another target here. And that will, if we drop down here, chances are very, very high that we will either form accumulation range down here, or we're just going to wick down and just visit this area for a very brief moment. But I'll be adding, you know, on a big position on Euro USD if that happens, because I'm looking at a cycle play here. Statistically, if you go long on Euro USD in December, you have a 70% chance of winning, and that has been true since the foundation of the euro as a currency. So that's a high win rate. Now, the problem is, last time Trump came into office, that happened a little bit later. The long-term bottom happened around in January or something like that. So that's my view right now, like on the bigger time frame on EU. And I think this is reflective of many other pairs as well. We can look at, for example, the other major pairs. We can look at the GBP USD on a daily. We are inside the long reload zone. We're hitting that trend line. We're at an area where I think if you go out to the monthly, this is on the monthly, you see this big area right here, obviously been active. You know, I started acting as resistance in July 2023. We broke above it. We're now retesting that area, confluent with the high time frame reload zone. And this is on the monthly. Going to the weekly, I do see signs of a possible accumulation down here in this area. And we also had that break of structure. Now, of course, we are back down here. So we're getting very close to the stop loss of my, you know, mid-term swing points. But for my long-term positions, I'm looking at this as the end validation. And I'm thinking, you know, when we'll see a possible shift in Euro USD? we'll also see that possible shift in GBP USD. But I think the move might be more accelerated on EU, because I'm also expecting a possible weakness to come in for the US. So if weakness comes in for the US dollar and strength comes in for the euro, which I think might not be there for the pound, I think euro will switch to a strong position quicker than the pound. So I think EU will move much quicker. But if you look at the majors here, you can look at ADUSD, same thing here on that one. Major support. I know that Victor has been talking about this one as well. Major support on AUD. We can look at NZD USD. NZD USD is breaking down, right? But it's still, if you look at this from a monthly perspective, NZD USD statistically has not been traded for very long below this level. And if there's going to be a cycle play here, if we see a switch in sentiment, these big Forex pair trade against the USD can potentially form a long-term bottom. Okay, I've been talking for way too long, Victor. I'm gonna breathe and then let you know what you think.
Good. You're making great points there, Jonatan. I too see that we have been talking about this. You call it the accumulation, and of course it is. Of course, I talk in terms of quansies and order blocks, and I identify this area as well as a demand area for multiple reasons. For those who haven't seen my analysis lately or the last couple of sessions, that is we are, of course, this is the weekly time frame, so it's a huge time frame for day traders, but it pays to pay attention to this time frame as well, because the daily, everything else depends on, is built on the weekly, right? It goes from the higher time frame to the lower time frame. So we were on a weekly time frame, we were in a very impulsive move to the downside. We broke that neckline as we had that reversal, and now we're coming back to an area of demand that dates from more than 2 years ago. So it's a huge area, visible on many on a very long time frame, more than 24 months, and we are right there. And the reaction we had, this is of course a quasi in my book, right? It's a reversal pattern. It's one of the ways that the market uses for a reversal, right? That's the succession of lower lows and succession of lower highs. We were in a downtrend. We broke that by breaking that, taking out that high, and now we're coming back to retest that. So now is the first one of the two test area where price are going to come back to, more likely than not. And by the way they react, we can have an idea what is going to happen, going forward. Are we going to break through it and continue perhaps to the next test? And we'll see then what happens. But are we going to go through this current demand area, or are we going to have some kind of reaction, and from there maybe perhaps retest the highs again? I don't know. I honestly don't know. I don't think anyone really knows what's going to happen. But this is the area where, if we are going to have a reversal for whatever reason, fundamental or not, this is the area that is likely to be defended. This is the area where the buyers are likely to come in based on the technicals, right? Even if you don't have a fundamental view, you can agree, at least if you consider this a demand area as well as I do, that this is a great area where buyers will come in and likely push price higher. And by the way it came in and the reaction we had, the price action after it tapped into this order block, to me is it tells me something, right? And what it tells us is, of course, that area is being seen as a demand area, as we would have expected, based on the fact that it is a structure from the left, and it is being reacted. Price does form that weekly bullish order block, and it's fresh, and it's currently being retested. So it gets very interesting, because immediately we get a reaction that we were expecting, and now is the question: will we get follow through or not on that demand area where the buyers are coming in? Are we getting that follow through or not? On the weekly time frame, there's no indication we are, But of course, we can go to the lower time frame to see if that's going to happen. On the daily, we see the same area, and actually we see a reversal pattern that has formed on the daily as well. It breaks by the wick, breaks that neckline, and goes back to that area as another area, not the same week, but another area where we possibly could see that action, that movement. We don't know yet if that's going to happen, but the lower time frames, I mean, the market cannot reverse without first reversing on the lower time frames, right? If it is going to go up, automatically you will see those reversal patterns on the lower time frame. Meaning, if we are in the daily, we should be looking at the 4 hour, the 1 hour, etc., to see that reversal. So we are getting into this daily order block on the it is on the daily time frame, but we're getting back to that daily order block fresh, being retested, part of a quasi. Actually, it's not fresh anymore. I stand corrected. It is a entry order block on the daily though. We go to the 4 hour, and we are on the weekly and the daily. We are at the right spot, right, for a reversal. So anytime now that the market, and by that I mean this, right, we form this fresh order block, we are at the area where price could reverse to bullish and then push higher for that follow through. The daily as well, we are in that daily order block for that reversal. So we are on the daily and the weekly at the right spot, the right area, although the area is quite wide. So now the next step is, to me, to see if we are going to have that reversal or not, is to see if the 4 hourly as well is telling us that we are going to have that reversal. And what do we see? We only have one entry order block on the H4, and we are currently in that area. It doesn't mean that price will for sure reverse, but this is such a great area where we could see a reversal coming in. And guess what? We have the FOMC with some great news. Not great news, but I mean impactful news this week. So could that be the catalyst? Could that technical picture that we're seeing, where a possible reversal is forming, and that catalyst, we know that FOMC is coming out this week with the interest rate decision, could that be what it needs for that reversal to get on track? Perhaps. So that's very interesting. I'm looking at this area on the entry order block on the H4, and if you go to lower time frames, I can even spot already, right? We have we have an outside bar here. Let me indicate this, right? After, we have an outside bar here. So I'm interested in the current area already. But if we go any lower, I will be interested in the other. Let me see. This order block isn't an entry order block. Let me correct that, because the quasi hasn't been activated yet. The quasi activates when we take out this high. So even if we go higher, I'm still going to be waiting for price to get to that order block for that move up. Or perhaps it's not going to do that, and we're only going to reverse from the fresh order block we are currently in. I don't know if that's going to happen. I'm just going to follow whatever the price is telling me. Let's see. I changed price feed without knowing, but there we go. So that's my expectation. I don't have an idea if price is going to reverse or not, but I can identify that we are currently on multiple time frames in a very great area for a possible reversal to start presenting itself. So this is the H4 where that's one of the areas where I'm going to be looking for a reversal, and maybe that's all the reversal we're going to have. We'll have to see, but it's a great area in any case. And I don't want to marry this reversal on EU, but it is such a great setup because it has higher time frame confluence confluence. So I surely want to be a part of it if it does reverse in front of us.
I think you said
yes.
You said like you don't want to marry that reversal, but it looks like a good area. And I think all we're doing really is we're just looking at a price chart here, and we're thinking in terms of risk to reward. And
Mm-hmm.
when we say like this is such a good level for reversal, it doesn't mean that things are, you know, aligning perfectly and it has to reverse here. Simply what we're saying is this is a level where the invalidation below is much closer to entry than the possible profit target, right? So we're looking at a level where we're saying if we enter here, the upside potential is much, much greater than the potential loss of this trade being invalidated. So I think, you know, we have to really, when we're trading, right, we really want to make sure that we're thinking in terms of risk to reward, right? Especially when we're looking at trades like this. And I know you're very big on that as well. When
Yes. Yes. I want to say, some time ago, I think I wrote it in my journal a couple of times just to remind myself. But one of the things that one of the observation when I wrote in my journal is that somehow I catch myself thinking that if I have a single signal, it means that the market is going to go that direction, right? And it's very tempting to think that way because, of course, our system, our system of we're trading it is probably because it's profitable. So it's actually is telling something about the probability of price moving in a certain direction after the signal. But it doesn't mean it's going to be that particular, each particular signal is going to go in our direction. So one of the ways to detach from the result is not to accept or think or interpret the signal as a sign that the market is going to move. Rather, it's a sign that this is the place where the risk and the reward and the probabilities are in your favor. That's a different thing completely. And that's the importance of not marrying the setup, because this area is great. Whether price is going to go down or up, I don't know. We don't know that. But we only know that this area, based on the data we have, is a great area where we have the profit in comparison to the risk that we're taking, combined with the probabilities, right? The win rate is in our favor. So we're supposed to take this trade, whether it goes up or down, we have no control of that. The only thing we can have is identify the areas and act upon them, right? That switch in mentality, I think, is important, because some time ago, I used to have that feeling, although mentally I knew that I shouldn't do it, but I was thinking I had a signal, why didn't it produce the results that I want, right? And it's a little trick, and if we don't correct that, it's going to make it dangerous, because you're going to have some expectations that are not being met, and perhaps that can be the beginning of some errors, emotion coming in, revenge, etc. And that's not the interpretation, the correct interpretation of a signal of your system. It just means that this is the place where you need to enter and let go of the result. Just follow the process, and the statistics will take care of the results.
We have an interesting comment right here, and I gotta say, first I gotta say, I agree with this comment, but the thing is, if I would take Victor's glasses, if I would put Victor glasses on, just grab it right here off the screen and put them on myself, I would probably not see the same chart, in the same way. And this is exactly the analogy that we have to have in trading. So what Victor is doing here, all the boxes, all the possible entry on the 4-hour, 1 hour, daily, weekly, all of that, like all of these boxes, is his way of looking at the graphs, looking at the charts. It's his lens through the way he watches price action. And my lens of watching price action is different, but he knows exactly what he's looking for, and probably the boxes that he has is a way for him to make sense of the market, a way for him to create a map of where he should focus and what he should look at. So it's interesting, you think it's too much noise, while Victor probably thinks this is the perfect balance of noise that he needs in trading, which just goes to show that we're all very, very different, and we have to find our lens that we really like. Me, for example, I feel like I really like the idea of, and I've said this hundreds of times probably. I like the idea of scalping. I like the idea of getting in and out of the market quickly, but that's not my glasses. That's not my type of lens that I should be watching the market, because I know that when I zoom out, when I look at the daily and the weekly, everything just makes sense. When I'm on the lower time frames, it's stressful. I make impulsive decisions. I not really get a good read of the market, but I switch to the weekly and daily, and I can see exactly what's going on. I can see where I want to enter, what I want to do, and it's just it's interesting that you have this canvas, right? And then you have complete freedom of how you paint your picture of the market, and there's so many different ways that it works also to be profitable. So it's really cool.
Yeah, I want to say that I agree. Actually, I do agree with the person who says this is kind of noisy, because if you see it for the first time, yes, of course, it's too much. You can't see, you can't see the complete picture because there are so many things right there. But of course, the thing is, which every time that I look at the market, and this at the chart, this applies for everyone. I have a certain, as Jonathan, a certain lens, a certain list of questions that I ask myself, and I train my focus to only see those things that are relevant for that question. So if I'm looking at this is on the, let's say this is here. I agree, it's completely those letters are, make it very difficult to read. But let's say I'm on the 15-minute, and they are what I want to be looking at. Actually, let's look at the 1 hour. What I want to be looking at is what are the relevant
Victor,
areas.
I'm sorry to interrupt you here, but I think maybe you could explain this while also at the same time maybe analyzing gold, because if we had some requests here of taking a look at gold. So if it works for you, maybe do the same type of breakdown on while doing gold, if that's okay with you.
Yeah, that's perfect. No problem. I do have. I was saying that I do agree that you need to watch out for making your graph too cluttered. If that's the case and you can't get the feeling, get a good view of what's really happening, then you have too many things on, and it's obstructing your view. But one of the things that I did is, and perhaps this can help others, is that I indicated the object that I have on my screen with the different time frames, right? And I made them visible only on certain times. So let's say the weekly is only visible for the weekly and the daily and the monthly, but not on the lower time frames on the hourly, right? So I don't get the same. I don't see everything on one chart, but even so, it can be look like it's too much. But for example, if I'm at the daily time frame, I'm not looking at the weekly, although I have them there because it's the next bigger time frame. I'm looking only, for example, at the daily order block we have below here, and currently we have another one here, and the fact that I'm using other colors makes it more easier for me. But if you don't have those mini rules, what to look for in each time frame, then everything is gonna look too overwhelming, and that may make you lose your overview. But let's look at gold. Do we have something on the higher time frames, the monthly to look at? We don't have anything yet. We have on the weekly, we are in a demand area, right? A huge demand area, and considering we have been very bullish in the past, this area is interesting because it could be the beginning of a continuation of price going much higher. We are currently retesting that fresh order block. Other than that, there isn't anything else to see on the weekly, at least not through the lens of quasis and order blocks. So what do we see here? Well, we have a basically a reversal pattern. Although I'm looking for a long, what I see is a reversal pattern on the daily, a bearish reversal pattern, breaks that neckline and comes back, but we haven't reached the relevant area for that quasi, at least to me. So I'm looking for a reversal into that area. As soon as we get there, we haven't gotten there yet. Maybe it's going to happen this week. Who knows? Other than that, on the bearish, on the sell side, I don't see other setups. Right? That's one area that I'm very interested in. After that, of course, we have another area, but it's not relevant right now. We did react on the daily order block the way you would expect, right? Price creates the order block, moves away from it, and then comes back to retest it to have that reaction to the downside. However, that's not something that I would trade because it's no longer fresh, but it's, as you can see, it's perfectly tradable because the market did indeed react as it should of that daily order block. On the buy side, since we have a weekly demand area here, I don't see anything bullish yet on the hourly. On the daily on gold. So I don't have any setup other than this, but this is not part of a quasi. It's not fresh anymore. So it's an area that I'm aware of, and I know price might react positively to it, but it's not a trade to me yet. So I still want to see price start forming, switch back to bullish order flow on this time frame. That hasn't happened yet. So as long as it hasn't happened, I'm gonna be looking for I'm gonna follow the price action, current price action, which is bearish, to be honest, right? We had a bearish order block. The market went in, retested, and formed another bearish one. Although we haven't made a lower low, we are forming those bearish structures. So I'm still waiting for price to transition to bullish order flow, which it hasn't really happened yet. At least not on the daily time frame. And if we go to the lower time frame, there is a quasi that was invalidated, or at least an order block here. You can see these. This is a perfect example of how the quasi work. Actually, we talked about this live before it happened, which is this. We had a bearish reversal pattern, right? And it came back. We had two order blocks. This one, it didn't react to it, but it did react to the next one, which is the possible entry on the H4. And what does it do? It reverses from there, right? This is something we could have. You had two areas, and it did exactly what it was supposed to do on one of them. So that quasi is still at play. I would assume, because the structural target for that low, for that reversal, is of course that lowest point, which we haven't reached yet. So the question is, what will price do after we already reacted? We had an entry. Let me mark this the proper way. If we zoom in, you can see how, as the market came into that H4 order block, what does it do? Big outside bar. What does it do next? Moves down, doesn't look back. Very, very clean price action from price. And we had that entry order block, I think, days before this happened. All right, so the next question is, will price take out the structural low and starts breaking down again? We don't know that, but based on the quasi, that would be my target. Once it breaks this, to me, it can do whatever. Maybe it will switch back and come higher. As you can see, I'm not using the quasi necessarily for a continuation, right? The typical quasi, which is of course just an order, a head and shoulder, right? Normally I'm only looking for it to reach this area, right? This is the neckline, and to me, this is the TP that I'm looking for. And normally with a head and shoulder, the whole structure, right, is a sign that price might be going much lower. I don't trade that way. I only trade the completion of the order block, right? This leg can be traded, but I found that not to be very profitable, at least not to me. So that's the idea. So I'm waiting for price to complete that reversal pattern to see if it is, that will hint me what it wants to do. If it's even reaches that point. If it doesn't, then we know. Other than that, I don't have the daily yet switching over to a bullish order flow. So I'm still looking for that. On the H4, we do have a bullish quasi, right, which is this. But since we don't have let me get this out. It's this structure. There you go. And it goes all the way higher. That's the quasi, the inverted quasi, right? The bullish reversal pattern. And this is the area to me that it needs to react on or not to hint me what it wants to do. If it stops, if the bearish impulse that started from that order block stalls here, that's the sign that I need to find to think, okay, we're switching back to bullish, and then we can follow the higher time frame, meaning, right, that weekly order block that we have here, and the daily, not the daily, just the weekly, that we would be pushing higher, because I still think there's a lot going on. There's the bullish case for gold is still present, and it hasn't gone away. So I would still expect that at some point we will switch back to bullish order flow, which we aren't exactly at this moment, at least not on the H4, where order flow is very clearly bearish.
Yeah, let me see if I can take a look at gold as well. See if we have any. I'm just going to do more of a general, simple price action analysis. Just look at a couple of levels. Okay, so we have, first we'll look at the weekly. We're going to do a top-down analysis. Just simply looking at the asking one question, basically, what's the trend? And if we can identify a trend, how can we enter the trend? And if we can enter the trend, how can we manage risk within this trend? So on the weekly, I mean, I think we can all agree that this is bullish. I think we can all agree that this is an uptrend. Okay, so there's not much to do here on the weekly. What I like to do is I like to look at the major swing points here, and we obviously have a couple of good swing points. I would say I'm looking at this as one move and this as a second move. So when adding my fibs, I want to look at where's the reload zone here of this move. And that's going to be right here. Now, because this is gold, and when gold is in an uptrend, it can sometimes move with quite a lot of momentum, which means that the big dips are not always going to be, low. It can happen on the 50% as well. So I want to be adding the 50%, and sure enough, what we see here on that wick right there, we did come down and test the 50% fib here. So on the weekly, this just looks like an uptrend, and it looks like we had a dip in an uptrend, and it's a high momentum uptrend. It didn't come lower than a 50%, but we have something. It looks much different, I would assume, on the daily, because this is what I would view as one move on the weekly, but I can see that we probably have these types of move on the daily. So on the daily, I suspect that I might have to use that low as my fib anchor, and that's like we talked about. We have several moves here on the daily. So now we go from an uptrend to a potential shift on the daily, because the trend that I'm looking at on the daily is obviously this, something like this, and we even, we have this. So make it a little bit bigger. So on the daily time frame, we're going going from being very bullish on the weekly to being kind of slightly neutral on the daily, because we have an important swing point right here, and that one broke below that level right here. Why is it gray? It's not supposed to be gray. That's better. So we broke below that level, hit the 50% area, and then reclaim that level. So we have, why this to me is neutral is, if we would have stayed below this level, I would have said that we have a daily break of structure and we're not able to get back above the level that we broke. But not only did we get above this level, we also got above the level that where the break lower was initiated from. But there is some strength here, but not enough for me to be very bullish. When gold is trading like this is when I'm very bullish on gold. Like, there's no reason for me to be bearish on gold at all. I'm not neutral, I'm not bearish, I'm very, very bullish. And I'm still bullish, still very, very bullish on gold, right? And we get a dip down there, still very bullish on gold. We're in an uptrend, but then it dips down. And when it dips down, that tells me that I gotta be a little bit careful now, because if we get a move like this, now we have a downtrend and we have a very, very obvious top formation. But now we're actually reclaiming that area. And it looks to me as we are potentially forming a range here. We extend this here. What we see on gold is a potential range here. And if we move that up here, we see the range EQ being around this level. And that's the reason why I would be neutral on gold on the daily. But then we have the 4 hour. And on the 4 hour, we have a perfect retest. Right inside the reload zone. On the 4 hour, I would expect some upside. But no, if I would go long here, I would probably not trade this higher than this area. So if I would go long on gold here, I would probably go long based on this swing point that we're creating right now, or a 1.5 to 2 hour trade. But that's based on the 4 hour. If we reclaim this area, which is 2,720-ish, then I would flip to being more bullish on gold. So it's a bit, I'd say it's a bit complicated. We're in an area where I don't really have a strong conviction on a direction on gold, but I would definitely say that this current bounce that we see right here is looking very good. We came down into very good area of support, and we're getting some momentum here to the upside on this support level as well. So that's my take on gold right now. Then I know we have a couple of other, yeah.
We have Pedro with us as well, from our Portuguese-speaking community. Yep. Nice.
Pedro, let me know if you want to get on this. Maybe he wants to come on, do some live trading this week. We'll talk about that after the live stream. We're going to do some live trading on Tuesday and Wednesday. While we're on gold, maybe what about a scalping gold? Okay, so this is actually really interesting, because now we've gone from the weekly to the daily to the 4 hour, and we can continue going down, and if I'm gonna be looking at a scalp, I want to make sure that I'm aligned with the higher time frames. I think those are the trades that are really can really start running as if you get a low time frame entry and you're aligned with the higher time frames, you have the probabilities in your favor, basically. So now we're bullish on the weekly, neutral on the daily. I'd say intraday bullish, because we're bouncing on a good support. I want to go into the 1 hour, and I would say yes, I like this. I like what we're seeing right here. in terms of areas, because we want to be, if we're going to scalp this, we probably want to go long. That's what I'm thinking. I probably want to go long, and this is the first area that I'm looking at for a possible target. Now we're coming into the 15 minutes, so now we want to look at the local trend. We're going to be adding the EMAs right here. Load. So we got the trend, I don't know, looking something like this. I don't know, but it's definitely an uptrend. We are, however, creating a sideways trend here, a range going into the 5 minutes. So here, looking at this range, now what I would want to be doing in a scenario like this is I want to get in as close as possible to this area. If I believe price will continue higher, as I do, I want to get in as close as possible to this area. So actually, looking at this, we did actually have an entry right here. If I would scalp this, nice, then move. I would, so I would enter here, stops here, and then TP would be up in this area. That's probably the move I would be taking. Now we're talking about scalping, so in that case we probably want to get in and out quite quickly, and then of course it's going to be the high of this range like this. But if you let it run, then obviously you want it up here. Now if we do expect price to move higher, then we might want to look at a break above this level. Either break above that level or a break and retest of this level. So we might get something like this and move up into resistance and move back down here. And this is a possible pattern that I might see playing out. Now, of course, might be a very low probability of this pattern playing out. But if we do get a move like this, then that would be a good entry. And if we do get a move like that, then that would be a good entry. We also have very solid trade management levels right here. If you enter here, then this becomes your trade management level. If you enter here, then this level becomes your trade management level. Something to watch. But that's probably what I would be doing on gold from a low time frame trading perspective. What do you think?
I haven't been looking at.
Yeah, I know.
I haven't been looking at gold on that time frame, but I can surely look. If I were to trade, let's put mine on. If I were to look at, of course, I have to take everything. We are in a bearish order flow, right? Because of the structures on the daily time frame that were lastly formed, which is this order block. Actually, this one that happened in as this was the other one was being retested. So I need to start with that in mind. Okay, so the daily we are and last we checked we're in a bearish order flow. On the H4, what do I see? There is a bullish quasi, but we haven't reached the area yet, which is this order block on the H4. We did reach it, but we didn't reach it on the H1. So I'm still thinking it could go a little bit lower on the H4. Does that help me? Not really. There is, however, a bullish order block here, which is fresh, but it's not helping me either, since that is we're not there. On the H2, I would expect price to reach this area before we move higher based on the quasi that we have here. But other than that, I realized that there is also on the, let me check. No, it's not an order block on the lower time frames. What I see is a outside bar. Is this still fresh? No, it's not fresh anymore. So what I'm left with is a fresh H4 order block for my higher time frame biases. So basically, I don't have a setup based on the higher time frame. So I typically, when I don't have anything on the hourlies, I don't go to the lower time frames. But if I were to choose something, if I had to, then I would think that this move, this reversal that we're having, basically it's a V-shaped reversal, is still intact. I don't see a reason to think that it has finished already. So I would expect price to go higher, right? Either after a little retrace or just continue higher from here. Either way would make sense to me. And going into this, because we do have this structure here that we haven't reached yet, which is that would be the target for price action, I would say. I would expect that to be the area where we can find some sellers coming in, but that hasn't happened yet. We haven't reached that. I mean, on the lower time frames, as we're going to that area, do we have something? H1 doesn't tell me anything. Oh yes, we do. Ooh, that is beautiful. Ooh, that is beautiful. Did not see that before. Which is this? There's that outside bar on the 1 hour. What does it do afterwards? Look at this. This is just beauty. Such a beauty. Look at this. We have this outside bar here, right? These two candles. Do you agree that's an outside bar, Jonatan?
Which one? The red one?
The two with the two arrows. Is that an outside bar? These two candles, do they form in outside bar? Yes, of course it is.
Well, yeah.
It does, and they're the same color, but it's still an outside bar. And what does it do next? As it closes here, it comes back, retests that order block, and then moves away. Such a beauty. Look at that.
Yeah, that's very good.
It's this move. It closes up, comes back to that order block, and then moves away from it. That's exactly the trade.
That's also the area. I said, like, if I wanna get in on this on the low time frames, I wanna get in as close to that area as possible, because that's also the invalidation area of this whole move.
Yep. If I were to scalp this, I would have scalped it to the not as a breakout, of course, but just to the outer skirts of the range, and that is this 5-minute order block there, right? It would have come back to that higher time frame order block, outside bar on the H4, move out, and that's exactly where you see those. Well, that tool didn't work out nicely, but that's exactly where you find the wicks being formed, or they were already formed. Right, that would be a scalp that I would do. Of course, it already happened about an hour ago, but that would be the kind of things that I'm looking for. If I were to look further, I would say we have now a range that it is unclear to me what we want to be doing, because both these extremes are within the bigger range that was created with this move. So I think we'll have to break it first, and then we can have an idea if we're going to continue. But it looks like we are. And actually, do we have a quasi? Of course, we would, maybe on another time frame. Let me check. Yeah, I would. Yeah, this looks bullish from here, right? It reacted the proper way to that bullish order block, and I will have to wait for it to go much higher if I wanted to participate, but it looks like it is on its way, making higher highs. The market structure is bullish. I would expect price to be going higher, but where would I be entering? Maybe this order block, if it comes back to that area. If it comes back, because it doesn't seem like it wants to be retracing that much. Right, that would be somewhere to be entering and targeting the other side of that. Something like that would make sense to me, either all the way down and targeting these highs. Something like this would make sense to me on a lower time frame, without the higher time frames confluence, without the bias.
I like the comment here also saying that there's also a trend line, and if you go back to the lower time frames there, and you can kind of see that trend line, and I like the trend line. The best trend lines for me is when it aligns with a horizontal as well.
something like this.
Yeah, I think that's
Yep. The best trend lines are indeed alignment, but also the ones that you don't need to trace for them to be visible. If you know what I mean. If you see the trend line without even putting the
exactly.
trend line on, those are the best
That's
ones because I mean
yeah,
it's
and that's
so
mostly
obvious.
yeah, exactly, and that's how I trade trend lines. It's just you just look at the trend and then you can identify here's the trend line. That's I don't
Mhm.
really add them. It's just we kind of know where they are. We have not stopped doing the giveaway. What I'm going to do here though is I'm gonna post a link in the comment and in the description to a giveaway. I'll do that shortly, but I'll be giving you guys the code to the giveaway in this live stream and in tomorrow's live stream as well. But we're going to be drawing all the winners on Wednesday. Okay, so we'll be doing giveaways every live stream, but we'll be drawing all the winners at the same time on Wednesday.
NZD USD short. Someone is short and would like to have our opinion on it. We have to
Yeah,
say though that
it's
we have to
interesting.
say though NZD to look at is that's why we are here, right, to show and share our views on the market. But just as a disclaimer for everyone, these are personal opinions. They're not financial advice, and this is not an invitation to take any trades at all. These are just how we see the market. And if you're dependent on external sources for your trade signal, you should look back to your to your trading process, because it shouldn't be like that. But we're happy to look at the market. Please, the person who asked us for the Kiwi Dollar idea, what is your time frame or opinion? What is your time frame? If you could share that in the chat, what is your time frame? Where did you on what time frame did you go short this? I can do a quick analysis on what I see, where I would be.
We should also mention something when we talk about NZD USD short. It's this is like at the very lows, and like at the very lows of a let's say support area. Just keep that in mind, when you're shorting this.
Right there, what I see here is a break of a huge quasi on the weekly time frame, meaning this quasi. And last week, today's Monday, right? Last week we invalidated that structure, right? So that tells you how bearish things are on the higher time frame, right? We have an established downtrend. I stand corrected. Yes. Actually, that is not the quasi. Let me paint it the correct way, right? We have this is the actual quasi. That is the neckline to be broken. That's the head. That is the left shoulder. The neckline, it breaks it. It goes even higher. It doesn't matter. It comes back. And what does it do? Now we expect a move up based on the quasi. What does it do? It doesn't react to that order block, right? That's a sign, a huge red sign telling you there's a lot of bearishness there. This is the place. This is kind of the last line of defense for buyers on the higher time frame to come back and respect and defend this structure, and they failed at it, right? So it tells me that there's a lot of weakness, and chances, at least on the weekly time frame, chances are more likely to keep on going lower than going much higher. It doesn't mean it cannot pop from here. It can easily do that. But I mean, long term, I wouldn't expect this to be like the area where buyers are going to defend from now on going forward, right? So on the weekly, I see weakness, and there's also that fresh order block that was nicely respected. So the order flow on that time frame is bearish for sure. If we move this to left, there is a you can see this this is very typical, right? When you have a lot of weakness, there was a quasi here, right? I'm not talking about the current low, but let me mark this. Let me make this a little bigger. I saw a comment, someone in the chat saying that our chart is quite small. So let's make it somewhat bigger.
Yeah, but I think
what
I think what we should start doing is if we have an area where we feel like this is a good area, should mention what price that level is. A lot of people are saying, we don't mention prices. And just a quick comment on that. I don't mention prices because I don't look at prices. I only look at structures. And I don't really care what price Euro USD is at. I only care at what level it is at. And when I'm going to enter a trade, I use copy paste from TradingView into MetaTrader. And I very rarely look at and memorize the actual prices. So, but I'll guess, we'll have to start doing that so everyone can follow along.
Yes. So what I was saying was we have a quasi here, right? And this would be let me indicate, this is the left shoulder, that's the neckline, and that's the head. And it's a failed, as you can see, right? Let me paint it all in, right? That's the activation of the quasi, and it comes back. What's the area that we should be looking to buy, right? It's this area. On the daily, this is, not the weekly. And how did it react to that? It didn't. It broke it. Of course, we knew from the weekly time frame that it already broke that structure, but of course, we didn't know that as it was getting and retesting this order block. The fact that it's breaking on the weekly and also on the daily time frame is breaking a bullish reversal pattern speaks to the weakness that there is of this pair, right? So I see weakness all around, failed quasis on the weekly time frame as well as on the daily time frame. So what else do we see here? There is a fresh order block here that I would think would be retested, but I would just sell this area. I wouldn't be looking for anything else because it's just making breaking structure, coming back. I would be expecting this to be the most best idea. Let's check the chat to see if that person what time frame it was. 30 minutes. Okay, was it Patel? I think it was Patel who requested the Kiwi Dollar. Is it? I think it is. Yes, Patel. All right, for my friend, let's look at all the way down to the 30 minutes. This is the area that I will be looking for a short. Other than that, I don't see anything. It's just a lot of weakness on the H4. Of course, trend is downwards, lower lows, lower highs. Is there a reversal pattern at play? There is, but it hasn't activated yet. Other than that, this is the structural line to be broken. If it wants to go higher, it's not even reaching that as we speak. So weakness. There is a little buying coming in from this area as it was respected nicely. But it already happened. It's a fresh order block, and it did already exactly what it was supposed to do, which is retest that order block and move out of it. That's a play that's already done. So I wouldn't think too much of it. I think let me check. I touched the space bar there without knowing, but yeah, so that's the only thing. But this is a play. The bullish order block, the fresh order block that was created here, price reacted nicely to it. That's something that already happened. So that's not going to help us too much to indicate what price is going to be doing next. It is respecting this nicely as the second touch, right? This is the immediate, and this is the first attempt officially. But on the H4, that is on the H2. On the H4, it is no longer fresh to me, or borderline fresh. So yeah, I see buyers coming in from this structure, although it is something that I would not be taking. Other than that, there is a nice quasi on the other time frames on the H2 with this as the entry order block. if that's something that maybe this week will be something that could play out, right? Price coming back to that area, and as it is, because price is mounting a reversal. That's for sure. We can see that this would be a setup that I would take if it were to present. Other than that, I don't see a lot of bullishness necessarily on the H1. It is a nice area though. Don't see a bearish outside bar, although it looks like one. And so Patel, if I were to see this as a short, if I were to short, I would be shorting this as the area to me, right? We have of course, this is just one idea. It's not something, if you short it from here, it doesn't mean it's a wrong thing to do. But that's the bearish quasi reversal pattern, and if anything, I would be expecting something like this to happen. But this 30-minute bearish quasi, right, is actually not in line with the H4, right? The H4 bullish order block here. And if we open this, blow up this a little bit, you can see how the market, look at this pin bar, right, which is a bullish sign, and it's at a relevant area on the H4. So I would be a little cautious with that. But I do see a short here if you're looking for if you're seeing the same thing. I would say sure, I can see a short from there. It's already at 50% retracement. It's probably what the Patel was looking at to start thinking. I do see that outside bar on the 50-minute as well, right? But the area is not very selective to me. I would want price to go in that area before I start looking for the short. That's my view for NZD USD. I hope that's helpful for you, Patel. All right.
Okay, so we got the giveaway. We got the link to the giveaway in the comments section. We have 9 people already entered the secret code. 11 people. Okay, so the secret code is the name of the asset that we analyzed before NZD USD. That's the secret code to today's giveaway. And then, okay, so the name of the asset that we analyzed before NZD USD. Let's see if you can guess that one correctly. Interestingly in here, if you want to share it in the comments, then go ahead and share it in the comment if you have the right one. If, however, you do share it in the comments, that means more people are going to get it in the giveaway, and you lower the chance of you actually getting an account. So now, which asset did we analyze before NZD USD? And then what's the name of that asset? That is the secret code to today's giveaway. Yeah, you can't enter NZD USD. You're absolutely right about that, because it is not NZD USD. It's the asset that we analyzed before NZD USD. JC says XAUUSD. Maybe that's the one. Maybe that's the asset we analyzed before NZD. It maybe things have other names than the actual ticker as well. Think about that.
And that's it needs to be 4 letters, right, Jonatan?
It needs to be 4 letters.
Which 4 letters would that be?
Yeah, well, I don't know. Perhaps platinum. Maybe platinum. Okay. It starts with G and ends with E. I like this. This is a good one. Yeah, you're absolutely right. It's not 4 letters, but the code is 4 letters. So how could you say this in 4 letters? Think about that. Okay, let's see. How many? We went from 11 to...
This is the one. This is the one.
We got 41 people. We usually have like 100 people in here. So like, come on. Come on, guys. Let's do it. I know you guys can do this. We're all traders in here, right? We're all traders in here. Well, I know we can do it. Okay. So we have. What else do we have? I wanna take a look at the US 30 because I believe that you're done with your analysis there, right?
No, I am, but however, I would like to talk about the EU. There is a little setup coming up
Sure.
right now. I didn't discuss it because not in detail, because we didn't go into the lower time frame. It was more on the higher time frames. But we do have of course, we already talked about the possible reversal happening on the higher time frames, right? That the EU reacted on that order block we have below us, which is a weekly order block, and they did it in a specific way, which tell us that buyers are coming in at the weekly time frame. The daily as well formed the quasi. This is all what we discussed at the beginning. We come in, and as soon as we come in, well, not as soon, but this time around, we come into that daily order block, we do form a bullish order block as well. So that tells me that buyers are starting to get in to the move. Is this everything we're going to be seeing for the move to go up? We don't know yet, but it could happen. It could happen that from current prices, we will, push much higher and start that follow through movement that we're expecting on the higher time frames. So if we go to the lower time frames, I ask myself, what are the reasons, right? And I'm talking about this order block, this fresh order block. What are the reasons? What are the arguments that price action on the lower time frame is switching to the upside? And one of the questions that I ask myself is, do we have a H4 quasi? We don't. This is the neckline. We don't have it, but we don't have it yet, right? So, but based on the quasi, I can't have an entry. However, we do have an outside bar. That's this one, right? So once I see this, everything else of the quasi, I don't look at. Right? Remembering what we talked about, the lens that each one of us use as we look at the chart. I don't see anything else on the chart. I only focus on this order block because that's the only thing that answers the questions to me. The relevant question to me is, do I have a quasi? If I don't, then all the structure, that neckline, everything above here, I ignore, at least for this question. And then I ask myself, do I have a fresh H4 order block? And I do. That's this area right here, right? That's the area that was created by that outside bar. We have come in to that area and we left a nice, very nice pin bar, but we haven't had the follow through from that movement yet, right? So the pin bar is formed, of course, by buyers coming in this case, right? So on the lower time frame, let me go to the 1 hour. We have this structure, right? This is what created that pin bar. We have this movement, that V shape, but we haven't had the movement, the follow through out of that movement, that V shape correction yet. And the question to me is then, do we have reason to believe that it's still to come? We're going to come back and move out, perhaps. If that is a possibility, then let's go to the lower time frame to see if we can pinpoint any other structure that makes sense to us. We do have a very big H2 order block. Doesn't really help us, right? It's too wide. You go to the H1. We don't have anything. We don't have anything as a fresh. But hey, hold on. I see here I have an entry order block on the H1. So if I go to the bigger time, zoom out a little bit, I ask myself, maybe we don't have a quasi in the H4, but do we have a quasi on the H1? That would be a reason for me to go long. And we do have that established downtrend, the break of the neckline, right, to the highest point. And is this a valid order block for me to take? For that, I need to ask myself, is it below or at that 50% retracement? And sadly enough, it doesn't react, or it isn't an area. Let me see the whole area. It isn't, but however, we do have enough structures. Actually, this is the area that I'm looking for. I don't know why it was much higher, but this is the area that I'm looking for. And this area, right, the midpoint is below the 50% retracement, right? So do I have a reason on the H1 to look for a long here? Yes, I do. So this area, as long as it hasn't been invalidated, this is a great area to look for a short on the lower time frame. And we are currently retesting that area. We had that V-shaped recovery there, but we haven't shot up yet. So there is still a possibility of a maturation of that reversal pattern. If I go to the lower time frames, so I have enough reason to look for a long. And if I go to the lower time frames on the 5 minute, for example, I can identify, right? We went higher. This is the midpoint of that quasi. So everything below that is fair game, meaning I'm able to enter and take those trades. So this is on the 5 minute. If it gives me the sign or the signal as it is coming in on the 5 minute, then that's to me what I'm waiting for a long. If, and as we're seeing, it's not doing that. So that's the importance of just waiting for that signal to come along. But if it does, there are two areas where price buyers can come in. It's this structure where we have a lot of overlap in those order blocks, and the area below here we have more than two order time frames telling us that buyers might come in from these two areas. And I'm just waiting there to see if it reverses from any of those two, and if it does, then I want to be part of it. But that's not happening right now, and we have 1 minute and 51 seconds to wait for it to invalidate these structures, at least on the 5 minute. And on the 3, the 2, and the 1, the 1 has already been invalidated, and there wasn't any trade for me here, although there wasn't any structures either. So it's something I'll just let the market tell me if it wants to reverse or not from there. And from the looks of it, looks like it's not that interested, but who knows? We'll have to see. That's the setup that I'm looking at. So a possible buy here based on the H4 and H1, H4 fresh order block and a H1 quasi entry order block. And if I do get an entry, right, I'll be looking for the high of that structure, which is this area, right? And the level, for those who are looking for the levels, I'll be looking for price to go to the level being 0.5248, 1.05248. Oh yes, I did see that comment, Hamed. It's a little bit personal in the sense that based on how I trade, I have my definition is based on the data, and so I'm a little bit cautious to say exactly what the value is or what the definition is, because it's my definition based on my data, right? So to you it may be different, but the simple answer is a mid single digit number, right? So not a high or a low single digit number, so a mid single digit number. What exactly, you'll have to find out with your data to see which one, where do you put that level, that line. You consider this to be fresh, and if it has one more bar, you don't consider it fresh anymore. That's what I mean by having it a little bit. It's personal. I think it's optimized for my own trading. So a single mid single digit number. That's my definition for a fresh order block. No problem.
It doesn't have anything to do with the fact that it's not tested.
The first test needs to happen before that number, right? So it has to come back to the order block for the first time after within the mid single digit number of bars since its creation. Once it has been retested, I no longer consider it. If market moves away from it and comes back to the second time, it's already mitigated, used. I don't want it, right? So it needs to be fresh, and if it can stay in that area. I stop counting the bars. Once it comes back, I stop counting. So it can stay in the bar, in the order block more than the mid-single digit number, maybe 15 bars, but as long as it doesn't invalidate it, I can still take the trade. Well, those are the nuances of my rules, of course, but mid-single digit number is the basis, I think, of the message.
Yeah, and you also said in the beginning, you said like your way of looking at a fresh order block is based on your statistics, and your
yes,
your back testing results is personal to you, and I think that goes for that goes for everything in trading when we talk about, you know, examples of our own trading strategies. Now we can talk from a general perspective of patterns and you should do this and that, but when we talk about our own trading, kind of like it always has to be, you know, we talked about that a few weeks ago, of always adding at the end for me, right? So this is the way this works for me, and this is the way I'm using order blocks, you know, in my system, and things like that. So I think that's, you always have to, like, when a trader speaks about their system, you always have to have the assumption that they've spent many weeks gathering data on that system.
Yes, actually, everything we do, and that holds true for everything you should do as a trader, should be based on some kind of data. Ideally on a lot of data, but if that's not possible, at least some kind of data, right? The fresh order block, right? The definition that I just used to give you an example for the person asking one. What I look for, the rule to me, and that's personal, as we just said, it's personal. So you have to double test, double check, and back test this if this makes sense for your system. However, I want the price to come back and retest and touch this line, right, from that order block within a specific number of bars, since the creation of that order block, the creation, of course, is the close of that green bar. Once it does it, it can stay here a long time. It doesn't get stale just by staying in the order block. So it's still fresh to me, right? Even though it can take 10 bars, doesn't happen usually. But even if it goes above the limit of bars, since its creation, I no longer look at that rule. It only applies for the first time it comes back and reaches that order block. And I would be taking, you know, all the signals that come out from this area, you know, whatever if it gives me signals, I'll be taking it regardless of how many bars were already created from the creation of that order block at that particular moment. I hope that explains that's a good example, and hopefully it will go up, and I'll be taking that. I'll be, you know, if it does react, then I would be probably in that trade. Doesn't happen all the time, of course. It's only.
I'm gonna look at. I'm gonna pull up the screen here and look at two things. First, I want to look at gold. I look at gold as it has broken a interesting trend line. Now, this is not perfect, but we do have this pattern right here, which I like. I believe this is a descending triangle, but this is a bit too much to be a fake out, because it actually, like, it first a fake out and then it kind of reclaims that. But looking at this, it looks interesting. And here on the daily, we do have actually a confirmed breakout above. A confirmed breakout above. Yes, I know. I'm watching US oil. This is the one I'm looking at here. So we have a confirmed breakout above this trend line right here. And if you look at the 4 hour, we have a very, very good looking trend here on the 4 hour. This is something I'm looking at. I would have entered this if it weren't for the fact that I can't get into MetaTrader, because I upgraded MetaTrader and now I can't start it on a desktop or laptop. I have it on the phone though, but this is such a low conviction trade that I'm not really super interested in it. But it's something I've been following. The trend here is looking very, very good for those of you who are interested in in oil. But let's look at US 30, this one right here. Let's see. Now this is, I like this. I've been waiting for this retrace right here. So I really like this, because I think that the bull market is far from over. If you look at the daily candles right here, we have 1, 2, 3, 4, 5, 6, 7 consecutive losing candles, losing days in a row on US 30. That does not happen. It doesn't happen very often. And the level that we're retesting right now is, well, it's the 618. Well, right below we have the 618. So this is actually a level that I'm waiting for. I would love to get in on an entry on US 30 right here. Look at the trend, beautiful trend, getting it retraced down here. And I would love to see if I can trade this up to the monthly open, which is the highest up here as well. So an entry somewhere in this area, stops below these wicks, so depending on where the confirmation comes in, and then I would want to take a exit that position up here. So this is a long trade that I'm looking at from a swing trading perspective. I really like what I'm seeing right here. And but I think most who's watching US 30 maybe is trading maybe futures, maybe trading on the lower time frame. So if we zoom in, we want to look at this trend here that we have on the daily, I mean the 1 hour. On the 1 hour, we have almost like a picture perfect trend right here. This is it's almost like it just decided to trend in a perfect channel, you know, because this is just, it doesn't really get better than this in terms of low time frame channels. You can go to the 15 minute. This is just picture perfect. And when I see something like this, I like to look at the how often it's testing the 0.618 or the 50% fib. So we add the 50 here, hits the 50 right there, almost hits the 50 here. Oh, not really there. That one.
That's a very nice looking channel there.
Yeah, this is really good. And you can see every time, like, hit the 50, and then, yeah, this is just very, very good. And when you have such a solid trend like this one, then of course, one way of looking at the possible low here is to look at a change of behavior of this trend. And we might be seeing that right now. If we move like this, and we start moving higher, perhaps something like this, even on the 15 minute, this to me would be a signal to perhaps enter. That looks very good. Now that's of course on the 15 minute. Go back to the actually, let's go to the 4 hour. Yeah, if it doesn't break this, I think the US market opened like 4 minutes ago, if I'm not completely wrong. Was it an hour ago? Was it now?
I think it was actually, I don't know, since I don't trade equities.
no, the New York Open was like 4 minutes ago, 5 minutes ago. I think so. Please correct me if I'm wrong. Yeah. No. Okay. So if this is the low, then we should break above that high. And if we break above that high, we also have a good, it's also like, I like how the low and the high of this downtrend is also within this horizontal level. So the low and the high of the downtrend hits the low and the high of this horizontal level, which then of course, if we break this local high, that means we break the downtrend and we also bounce on support, which is that's where you want to look at possible reversals. Now I hope that US 30 comes down lower, because I want to see a test of this level right here. That's the area I want to see a retest on. And if we add horizontal line right here, it's the retest of this level that I'm looking at. And I think we have something now. We don't have something similar on the S&P 500. The S&P 500 is looking strong here. We got Nasdaq, obviously. Well, I think in current situation with Nasdaq's with the very strong tech companies, I think it's a given that this one is going to outperforming. But look at the wedge here. This is quite good as well. Now you have to make a couple of exceptions here with the trend line, but the overall structure is this. Got a rising wedge here. We also have a bigger time frame rising wedge on S&P 500. US 30 is retracing back down, but the Russell 2000 is also retracing quite heavily. I think it seems like there's, what's the word when something is not correlated? When you have correlation. What's the other word?
Inverse correlated. Or you mean not correlated is not correlated. I don't have another word for that.
Yeah, I'm looking for a word, but I guess one way of saying is that there seems to be a disconnecting. Yeah, it's like a disconnect between the correlations here, and like I believe we talked about this last week. We talked about one of the tenets of Dow theory is that the indices have to confirm each other. You have to confirm moves with indices, and right now what we're seeing is a inverse correlation between the indices. So, like for example, you might want to see a correlation between the Russell 2000 and the S&P 500 to find that we have an uptrend. Right, and what we see right here is we can look at the S&P 500 is looking quite strong still, but not really breaking to the upside. You have US 30 retracing quite a lot. Divergence, of course, it's a divergence. That's what we're looking for. It's a divergence between the major indices and the smaller ones. So here you have the small caps, but I think what's more telling is the Nasdaq versus Russell 2000. This to me is quite obvious. So this is an early warning. It's not a sign of a reversal at all, but it's an early warning, because if, for example, the Russell 2000 would continue to downside, like this, breaking this low, while Nasdaq continues to the upside, that's a solid divergence. That might tell you that, obviously the strong tech companies right now might be doing well, but then a bigger part of the rest of the market is not doing as well, and there you have a divergence of the indices, which can be a problem when you have a company like Nvidia, which I believe is 7% of the whole S&P 500. If that company is doing much, much better than every other company, then of course that will influence the S&P 500 more to the upside. It depends on what weighting the indices have, but that's an important thing to watch. And I'm keeping my eyes on this when it comes to potentially when potentially comes to figuring out where we might have the beginning of a recession, like a top in this current bull market that we have, because everything moves in cycle. We will enter a bear market, we will enter recession at some point, and from my research that I've been doing over the last few weeks or so, what I'm seeing is a lot of things are pointing towards the summer of 2025, and this is not only based on my assumptions and my analysis. It's a lot of conversations that I had with other like with macroeconomists, they're all talking about a potential recession coming sometime next year, around summer or end of summer, which I think is very interesting because of the fact that we had someone asking about Bitcoin as well. That aligns with, okay, so I think I want to kind of break this down quickly before we
You said recession, possible recession risk looming in, but is that all around, or US or Europe?
Well, Europe, you could argue that Europe is already slowly but surely entering a recession. But I would, like, when I talk about a major economic recession, we're talking about the US, I think, because that's the leading indicator of a global recession. You know, you look at at least from my point of view, and that the asset that I'm trading is going to be heavily affected by a recession in US. That's what I'm looking at, mainly the US stock market. And we can look at something here. We have Bitcoin, right? And the top in Bitcoin is usually follows a 3 to 4 year cycle. And if you look at the time that it takes for Bitcoin to form a bottom to a top, the average days it takes is about 500 days. To be exact, 497 days. And that, from this halving, it should put us at around the 25th of August or the beginning of September. So I would say somewhere at the end of August to the beginning of September, give or take 1 or 2 months or something like that. And what's interesting here is also because of the heavy inflows of institutional money into Bitcoin with the creations of these different ETFs and mainly BlackRock putting a lot of capital into the crypto market, you have a correlation between the S&P 500 and actually, yeah, exactly. Me and Dirk, we talked about this on my channel. I kind of did a deep dive in this, like a full 1 hour on this. But basically what I talked about here is the fact that now the S&P 500 might actually be a leading indicator. If we put the S&P 500 on the chart right here, I want to show you one super good example here. Yeah, for Bitcoin.
Leading indicator for Bitcoin? Okay.
Yeah. So if we put it on here, and well, now, okay, not a leading indicator, but we confirm Bitcoin's price action with the S&P 500. Okay, we just like we confirm a bull and bear market with like the Russell 2000 and S&P 500. So if you look at the top of Bitcoin in 2017 comes in around the same time as we have a top in the S&P 500. Bottom in the S&P 500, bottom in Bitcoin. Top in S&P 500, this is the Corona dump, of course, that we can't really, like, all markets just dumped. But what's very interesting is here, we have a top in Bitcoin. What news is that?
There's a news out on, yeah, that's PMI on, let me see, that's manufacturing PMI was.
On what? On US?
On dollar. Yes, US dollar.
Oh, really?
Yep.
Let's take a look at the S&P 500. Is that now? Apparently it's now.
Yeah.
Okay, let's just quickly look at the dollar currency index then. Where do we have that? Is this dollar currency index chart? Yeah, it is. Let's just quickly take a look at that. All right. Yeah, let's analyze that. I'm gonna analyze that for tomorrow, I believe. Take a look at what price action we get because we don't really have the time to do that now. But what I was saying here on Bitcoin and S&P 500 is we put a top in on Bitcoin right here, and we put a top in on the S&P 500 here. But we want these two charts to confirm each other, right? So now I know that the screen is very small here, but if I zoom in, then my drawings are going to be incorrect. But this is the top in Bitcoin, and then you have a small top here on the S&P 500. But you see in the S&P 500 that it does not break the lows right here, while Bitcoin trades lower. But the S&P 500, while the S&P 500, while Bitcoin is trading at these lows, the S&P 500 breaks the highs. The S&P 500 is not confirming Bitcoin's price action, and Bitcoin continues to the upside. Here, the S&P 500 breaks that low right there, and Bitcoin breaks this low right here. The bear market is confirmed on the S&P 500, and the bear market is confirmed on Bitcoin. Okay, Bitcoin is at the lows right here. What do you have on the S&P 500? Higher highs and higher lows. That confirms the bull market for Bitcoin. When Bitcoin breaks this level, the S&P 500 breaks that high. Bull market confirmed on Bitcoin and bull market confirmed on the S&P 500. So right now we have a very, very good correlation between the S&P 500 and Bitcoin. And when Bitcoin creates a low or a lower low, but the S&P 500 is not doing that, then you have a reason to believe that they are not confirming each other. And now with the institutional money coming into Bitcoin, they should confirm each other, because no one in their right state of mind would buy Bitcoin in a risk-off environment. And in a risk-off environment, the S&P 500 is going to create bearish market structure. So it's very, very good to confirm each other. And now when you're looking at these two price charts right here, they're trading very, very correlated to each other. It's just something to keep an eye on. And again, we talk about the summer of 2025 as a possible top in the overall market. Well, that also aligns with the 3 to 4 year cycle on Bitcoin, which is just, it's quite amazing how it's aligning.
It's
okay, with that said, I think
powerful analysis of yours, tying in the correlation with S&P, the equities market, and the timing of the Bitcoin as well. I think that these are great things to be paying attention to. Whether or not we should be looking at Bitcoin when everything else, not everything else, but the general equity market is topping out, if that's is a thing, right?
Yeah, because when you're looking at putting on risk, you want to diversify. So I mean, you want to be looking at, and I talked about this with Dirk as well, and how he's starting to sell off, some of his stock positions, right? Selling stocks, getting, slowly but surely phasing out of the market. And, we're talking about someone who has almost 30 years of experience in investment banking as an institutional investor and trading. And the way that he does this is he's looking at the market and saying, okay, either the top is going to be in the next month or in this next 6 months, or maybe even 12 months. Like, we have no idea where the top is going to be, but we know that the top is closer than the bottom. We can kind of agree on that, Most people can agree on that. So why not start phasing out of the market now and getting a good average exit, instead of trying to time the top and getting caught up in the panic at peak euphoria? And I think that's the way you want to look at this. So you want to I started selling Bitcoin at 100K. I have not, though, started phasing out my long-term stock positions, though. I'm still in the market, in terms of index funds and other types of investment. But I'm definitely looking at signs, actively looking at signs.
Nice. So that means that you're not passive investing. You're actively getting out and in, just at a not very frequently.
Well, you know,
And then
yeah.
you're actually
I mean,
investing, but actively
yeah,
managing
exactly. I
that.
mean, I'm trying to I'm trying to, you know, look at the overall cycles, you know, and look at the overall cycles of the market and try to maybe not time the exact top and bottom, but at least not be in the market when, you know, when we don't want to be riding the bear market down for, you know, if we're gonna have a 1 year long bear market, why ride that down when we can get out and then get in when we see signs of a bull market soon? Because we're talking about the higher time frames here. We're talking about weekly charts, and on the weekly chart there's so much time to react, and I think that's where a lot of good money is made that way, looking at the overall bigger cycles.
For sure. I can agree to that. All right, so
I think
we
I think we might want to do some questions before we wrap it up here, if we have any questions.
let's see if we have anything in the audience.
What does it mean? What risk off and risk on? Okay, so we have risk assets, and then we have safe haven assets. And risk assets are things that are, I guess you could see them as risky. Okay, so Bitcoin, there's a risk of buying Bitcoin, and there's a risk of buying stocks. Basically, risk assets are assets that you're buying, speculating that the value is going to go up and you're going to be making money, but there's a big risk to the downside. You run the risk of losing a big portion of your investment, and that would be, you know, Bitcoin stocks and those sort of things. A good sentiment for risk is the S&P 500, because that's obviously a stock index. So if the S&P 500 goes up, that means you're in a risk on environment. That means you want to be buying assets that are risky. And then when you're in a bear market, you're in a risk off scenarios. You could say that a bull market is risk on, a bear market is risk off. In a risk off scenario, you want to be looking at assets that are generally more safe, and things like just holding cash in USD is generally regarded as safe, because you're not going to lose, you know, 60% of your whole capital overnight if you hold it in the US dollar, but that might actually happen if you hold all your money in Bitcoin. So it's basically just, you could see it in a very simple way of bear markets or bull markets, basically. So the linear regression indicator is for Bitcoin. It's a Bitcoin indicator. I don't think it works for the S&P 500. We can try, but I don't think it makes sense. See, maybe it does. Probably not. Yeah, as you can see, it doesn't really make a lot of sense. It's just a rainbow. I don't know.
It's a happy rainbow.
Happy rainbow. What if you put it on Euro USD? Yeah, this is nice. No, it has to be on Bitcoin. It's coded based on Bitcoin's price action.
It has no significance on anything else.
Okay, I think we're done for today. We have the giveaway. We will be drawing all the winners for the giveaway on Wednesday's live stream. We'll have another giveaway tomorrow as well, and we'll be doing it the same way. So the secret code will be based on something that we're actually doing in the live stream, to make sure that the guys who are winning these accounts are actually paying attention to what we're talking about in this live stream. This indicator that I have on the chart is coded and created by Dirk himself. You can just go to indicators here and you search for Bitcoin Bitcoin log, and then you have the Bitcoin logarithmic regression created by Crypto for Money, which is Dirk Hartig. Get that one. It's very good. Well, it's not a good indicator. It just shows line. It's good for analyzing. You can't trade based on this. It doesn't really give any signals. It's just very good to use in long-term analysis. Okay. That's it, guys. Thanks everyone for joining today, and we will see you all in the live stream tomorrow, where we're going to be doing some live trading if I actually get my MetaTrader to work.
And but in any case, we will be live today as well in Discord. If you're not part of Discord, you're missing out. Join us in Discord for our workshop. We have them on every weekday, and in about 45 minutes we'll starting the one for today. So and in any case, watch out for this week. We have a week packed with high impact news. We're nearing the end of the year, so things can get a little bit funny as volatility winds down. But yes, please join us tomorrow again on our live stream.
Right. All right. Take care, guys, and see you tomorrow. Bye.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.